think we're going to start. Welcome everyone to our Master Your Move series. We've got a great lineup of programs. Today it's Feeling Stuck, how to buy before you sell when you don't think you can. Next week, it's all about don't leave boatloads of money on the table when you sell. And no, it's not about staging and painting. We already know you know that. It's about all those things that go on behind your back that you don't know about that can result in losses of tens of thousands of dollars. So that's next week's special. It's how to sell your parents' house. It's going to be, exactly what's happened to my price during the pandemic. What's going on in the local market areas. We're going to talk about your Zestimate and how do we price houses. We can make you a pricing genius. So there's a whole bunch of great programs coming on that I hope you'll tune in for. So today, it is not uncommon to feel totally paralyzed when you go to move. Gosh, there's so many reasons I'd like to buy first, but I do need to sell because that's where my money and equity is. So let's talk about that today, how we've handled it in the past and what options might be available for you going forward. So this is the ultimate catch-22 in real estate. I'd love to sell and know how much money I'm going to have, but if I sell, will I be left homeless, and not have a house to buy? Or in reverse, it might be, geez, I'd love to buy first, but then I don't know what I'll get from my house. There's no win. There's no perfect scenario, but we think we've come as close to a perfect scenario as possible. So here's the big problem. Up until this red hot seller's market, one of the tools that people used to buy first before they sell was the home sale contingency. They would make an offer on a property they loved, and they'd make it contingent on the sale of their house. In other words, we won't close on the new house until we've sold this house. We've been using that for 30 years. You've probably heard of kick-out clauses. There's all kinds of ways to formulate that plan. But here's the issue. In today's amazingly low inventory, high demand market, having a home sale contingency means you are dead on arrival. Everybody else can close when you want. They don't have a house to sell. You're not a contender. You are basically not, no one's doing that unless you find a house that nobody else wants. And by the way, there are still houses out there that aren't selling, and it doesn't mean that they're bad houses. It means they were overpriced. If you get them for the right price, every house will sell at the right price. If people were a little optimistic and a little aspirational, those still might be available. We do see them on occasion, but it's not, you can't count on your dream home having been overpriced for months and having someone willing to do that. So the other thing that we did for years was, listen, we'll go out and we will buy a house, and we're going to kind of extend the closing date on that house. And by the way, we didn't go out and buy a house until we had our house market ready. It was all cleaned up, decluttered, painted, staged. Maybe the photographs were already in the can, ready to go and ready to launch. And you'd go out shopping, kind of extend the closing date as long as the seller would. Then you put your house on the market, and then you would sell it and try to close on the same day. What you would do is you would go to the registry in the morning to sell your current house while the movers were there. And then you would purchase your dream house, your second house, in the afternoon, moving your proceeds from the morning sale to your afternoon sale. This still can be done, but let me tell you, see the photo we took here? The guy is on the floor covered with moving boxes. It is one of the most strenuous, hard to do things. We still do it. It is an option. Consider it. However, is your mortgage financing contingent on the sale of your house? And if it is, that also could be an impediment to you buying. All right, so if you have to sell first, you might miss your dream home. In other words, something comes along, but you haven't sold your house yet, you're not able to perform. You're not able to execute an offer. So you might miss out if you feel like you have to sell first. You might wind up in temporary housing or living with the in-laws. You've sold, but you can't find a place to go. So you have to find someplace to live until you can purchase your next house. Do remember that sometimes that's two movings. You move in with your in-laws, or you go into, the Marriott Residence Inn, and you've got two sets of moving costs or storage costs that start to add up. So there are costs associated with that if you can't move same day. But here's what's happening in a market that is appreciating. Overall in Massachusetts, the market has appreciated 13.3% year over year as of this morning. Some markets differ. Some markets are only up 10.7%. If you're in Barnstable County on the Cape, you're up 20%, or the Vineyard's up 46%. So there are different markets. But what happens is that if you sell first and then you go into temporary housing, as the market rises, the house you're trying to buy might continue to get more expensive. And that can kind of backfire on people as things go up, incrementally, pretty quickly in this market. But if you buy first, you get to find the perfect house, not simply the one that meets your needs when you sell, because sometimes if you sell first, you wind up settling. That's not really the house I want, but it's got the bedrooms, it's in the neighborhood I want. Geez, I wish I had a garage and an extra bath. Now if you buy first, you can buy the house you want, and then you can sell. The other thing you can do is you don't have to move twice. And lastly, next couple of things, you could benefit from this appreciating market. Listen, if I buy first, but the market keeps going up, I'll buy at this price, and then I can sell even maybe a little bit higher than I would have had I done everything at the same time. And then you'll be able to prepare your home to get top selling price. And that's it. For some people, it's getting out of Dodge and then able to do what you want with the house to make sure you maximize your profit. Because we know you are busy. Maybe you're just too busy to figure out how to sell your house while you're still living in it. Maybe you've got kids and dogs and you're overrun with activity and you can't be painting and staging and showing the house with kids in it. Your life will be so much easier if you move out. Or maybe you're just one of those really busy households. It's just full of people and people coming in and out. That's a hard place to be if you are trying to sell your house. So how can you do this? So I want to talk about transition financing. And I'm not exactly the graphic designer, and I'm sure our graphic designing department could do better than this, but I do like my little dollar signs on my bridge. What was I doing here? Listen, how do you figure out the money if you want to buy first, but all of your down payment and your closing costs and your moving costs are all in your house and you need to sell first? How can you do that? Well, we're going to give you a couple of options. That first option is a home equity. Now, there's some rules around that. So you have, in this appreciating market, my guess is unless you bought 6 weeks ago, that there is now more money in your house. I was exaggerating a little bit, but we have seen people, if the market's up 13%, if you've bought just 2 years ago, you might already have 20% equity in your house. So you might have some great down payment money. You would go to your local bank and take out a HELOC, HELOC, a home equity line of credit. These home equity line of credits is really financing yourself. I will tell you that there's not like one bank that's better. We're finding that the rates are better generally at your bank. And we mean local banks. Some of the big banks, the Bank of America, Wells Fargo, huge industrial banks, those can kind of be nightmarish to get through all of the process. I will tell you, no matter what loan you take, it is like an FBI investigation. I usually be prepared to give every financial document you ever had, right down to the loan you took from your sister for roller skates in 3rd grade. You need absolutely every documentation of of your income verification, all of your assets, what all your bills are, what is your debt. They're going to look into all of your retirement savings, money in your bank account. They're just going to double check everything. That's the way it is. Just be prepared. So as we said, that getting a HELOC can be the way to, this is my home sale contingency buster. If you get my drift here, we need to make sure you don't have to make a house contingent on the sale of it. So if you have a home equity line, that's one way, but there's another way. We have and know of programs called bridge loan financing. Now it's interesting. This is the fourth time we've done the seminar. And some of our participants are, I talked to my bank, I talked to my loan officer. They're not doing bridge loans. I will tell you the product is virtually dead. And the reasons it's dead is because they're money losers. It costs money to do bridge loans. But we do have three sources for, we think, really competitive, good bridge loans. And although they cost a little bit of money, so does moving twice, so does storage. And if we can get you in that new house and then allow you to really maximize the equity and sell your house for top dollar because you've been able to do things, we think it's probably worth it. So how does the money work on a bridge loan or a HELOC, that home equity? So you borrow money in your home. Both of them borrow money against the equity you have. If your house is currently worth $800,000 and you have a $500,000 mortgage, your equity in the house is $300,000. And you can move that equity into your new house and borrow that again for down payment, moving costs, getting your house ready. So that's where you get your 20% down payment, your moving costs, and your closing costs. So how does the money work in terms of cost? Well, you're going to have to pay for an appraisal. Sometimes they're inexpensive drive-by appraisals because, with artificial intelligence, they can drill down and they know what your neighborhood is worth. And when they have the details of your house, they'll come up with a value. So some local banks are just lending home equities based on what your city assessment is, which has nothing to do with your appraisal, but based on your tax assessment, because they know it's low and it's safe. So there'll also be some bridge costs. From what we've determined, bridge costs are about $3,000, give or take, depending on how big your loan is or small your loan is. It might be a little bit less. So count that in. And then you are asking, if you take a bridge loan, to have 2 mortgage payments. So if you take out a home equity loan, you're going to have to pay that back every month, at least the minimum payment, or interest only on that loan. If you have a bridge loan, you are going to have a time with 2 mortgages. Now that freaks everybody out, but I don't want anyone to freak out, because I want you to understand the mortgage cycle and how in this hot market, very few people are actually ever putting themselves in a position to have 2 mortgages at one time. This is how it works. If you had found a house in the beginning of February and you made an offer and you wanted to close in the beginning of April, that would give you 2 months, right? Until you and an additional 2 months that if you closed April 5th or today, April 6th, for example, if you closed today, your first mortgage payment wouldn't be until June 1. So you have almost a 4-month window of the time before you close. You have all that time before there's no mortgage payment. And then when you close, in that cycle, it'll be usually just less than 60 days before your next mortgage payment. If you close at the end of the month, it could be shorter, 35 days. So you can build 3 to 4 months in with no mortgage payment. And if you take the advice of an awesome realtor and you have your house ready to launch before you go buy, with this climate and buyers willing to close quickly, you will sell your house in time to not have that second mortgage payment. Now, I want to talk about what happens when you sell your house. When you sell your house, you've got that lump sum. Go back to that example of that $800,000 house that you've sold. You have a $500,000 mortgage on it. When you sell that house, you have to pay the mortgage off and the closing costs, but you have, a few $100,000 to put into the next house. Well, you've borrowed some of it for your down payment, but there's more money. Say there's an extra $100,000 or $150,000. Now, there's 2 things you can do with that money. Since when you take a bridge loan, that's a temporary loan, and then they
Linda, we have a request in the chat.
Yes.
Can you share the name of the 3 recommended lenders you mentioned for bridge loans?
If they contact any of our leading edge agents, we will give that out with all of that contact information. I don't have that handy right this minute, but we can certainly get that to anybody who wants. If you want to put your name in the chat, we will make sure to get that to you, but that's behind the scenes, and I can think of one offhand, but I know there's a credit union and 2 banks that we would recommend. So we will absolutely get that to you. But thank you, Vanessa and whoever, Vanessa, thank you, Bianca, and whoever asked that. So one of the things I want to explain is you have an extra $150,000. There's 2 things you can do with that money. The bridge loan product is going to put you into a standard, probably 30-year fixed, or you could choose a 20-year fixed loan, however you decide to do that with the bank. And those rates are very competitive. They're what they're offering their current customers. So the extra cost is in the bridge loan. It's not in the actual end loan. You can take that $150,000 and just apply it directly to principal and continue to pay your mortgage over the next 30 years. But if you applied it directly to principal, you won't have a 30-year mortgage. You will have cut off so much of the principal that that'll cut it down by years in the way you can bring that down. Or they will recast your loan. And if they recast your loan, they'll take that money, apply it to take it off your mortgage amount, and they will recast your loan and re-amortize the loan. So you'll have actually lower mortgage payments than the one you took with the bridge. So those are just things to know about. If you recast your loan, you'll still pay it for 30 years. If you send the whole chunk off, you might shorten your loan significantly. And then there's hybrids of that. Talk to your mortgage person. But I think people do not realize if you pay a little bit extra, how much more you can pay off. I read a great stat this week that if you divide your mortgage payment in half and you pay every 2 weeks, so just like there would be 52 weeks in the year, you'd have 26 payments instead of 12 payments. You could bring a 30-year mortgage to 22 years. So anyone who's on a bi-weekly pay schedule, that is a great way to save tens of thousands of dollars. All right. So the cool thing is if you get a letter from one of these 3 people that we can recommend, I will tell you that the cool thing about your pre-approval is it says it's not contingent on the sale of your property. And those are the magic words that any listing agent wants to report to their seller to make your offer more attractive. There you go. So most people find the costs associated with the transition financing are recouped. In other words, even though you have an extra expense, you'll make more money when you sell your house because you had a chance to stage it and you didn't have storage costs, etc. People are getting money for their house because getting more money for their sale because they can take the time to prepare it properly after they move out. And the stress is removed from trying to move same day. And it's really nice to not have any closing costs. So one of the key things we want to tell everyone is keep calm and do not fall in love. One of the biggest problems is that you're going, oh, I'm willing to bridge, this is great, and you go shopping. No. Give yourself 60 days with one of these local banks that's still doing bridge loans and allow them to get all your financing vetted and get you that letter in their hand so that you're ready to go. Because that's their frustration is they're not going to be able to provide the bridge financing that you need if you say, hey, I found a house, can I have bridge financing? So please take the time and let us help you create the best process. So let's start 2 weeks in advance 2 months in advance before you find your next home. Resources. Well, one of the things that we have here for you, so we just want you to know is, listen, we have got amazing painters, amazing kitchen and bath people who can refresh. It's amazing what happens to your house when you throw in new countertops, you paint the cabinets, you put in the right hardware, you refinish the floors. And we have people that can help you inside and out on the landscaping to get rid of all that junk in the basement or that's in the garage. We have people who can, again, refinish floors or install new floors or tile, whatever you need. And just a myriad of trade people that can fix or repair anything before you go on the market so that your house is sexy and fetches top dollar. So just wanted to quickly show you simple, tiny improvements to your home. This was I think that was a Back Bay kitchen. Hey, it's a white kitchen, had white appliances, and countertops were granite. But what happens when you put the subway tile in and the new countertop and the stainless steel appliances? That particular unit was someone who flipped that unit. They put just over 20,000 in and they got $160,000 more. These kind of investments are worth it every day. Yes, it's great to do the floors and paint, but if you stage it, you will get more money. But maybe your kitchen's just a wreck. We can come in and look what IKEA can do. That's $20,000 worth of IKEA. And if you don't have the money to do this, don't worry, we've solved that problem too. So don't panic, because we have people who get paid back at closing. So there are ways to do this. So that $20,000 IKEA kitchen is the countertops, the sink, all of the cabinets, all of the appliances, but it does not include the tradesman or the floor. So I'm going to guess it's going to run you about 40, but look at the miracle that it creates. It certainly helps you sell your house for tons more. And it's great practice for your existing home so that if you make any little errors or you change your mind on design, you can move forward and figure out for your next house. This is a simple paint job with a couple of things done, but look what happens when you paint those cabinets, drop in a new light, new stools, and stage the countertops. Little different window treatment. So we have a new program that we're excited to launch at Leading Edge. It's called our Go Service program. Hey, and we know moving is hard and we're trying to make it simple. So at the risk of reading to you, it can be daunting to buy and sell a home at the same time, but we know how to eliminate a lot of the friction points. Our Go Service, as in get on with your life, can remove the hassles of cleaning, repairing, staging, even updating your home for a quick and maximum profit sale. We have a carefully curated team that takes care of everything so you can, just concentrate on your next home. So your home's preparation costs are paid back at closing. How does that work? We have a team of people who will come in. This team of people will, there's a promissory note that's signed, and we get paid at closing on everything. And you've just improved the value of your home dramatically. So go now, sell later. Buying opportunities in this challenging market come and go in a flash. With our Go Service, it lets you strike fast without selling your current home first. We have financing options, which we just outlined to you, to make you a very attractive buyer. Then when you're ready, we take complete care of selling your home, and that is real freedom. All of you have seen these predatory companies. I mean, I get letters in the mail, I get emails, they're all over social media, Facebook, Instagram. Listen, quick cash for your house. We're gonna make this simple. You don't have to clean up. Pick your closing date. Close soon or we'll wait. Do you know why they're willing to do that? Because they're gonna sucker punch you and take a lot of your equity. They offer you way less money because they're going to go into your house, clean it up, and do the things we'll do, and they make the profit that should be in your pocket. So, let us do the heavy lifting, move out, and let us take care of your house for you. And then we talked about that maximum profit sale. Here's a little video in closing. I want to let you know that after I run this, if you have any questions that I can answer, or I'll stay on and help anyone as much as possible. But this is our little video. Here we go.
You want to sell your home and maybe buy another. So what's stopping you? Too busy to get it ready? Who isn't? Maybe it needs some work. Maybe a lot of work. Who has time or money for that? But you can't buy something else until you sell. What to do? Tap into Go Service from your Leading Edge real estate agent. Go Service will take care of all the hassles of selling for you so you can get going. We provide cleaning, junk removal, painting, kitchen and bath updates, repairs, landscaping, professional staging, even pack and move services. You pay nothing until you close on your sale. Think you can't buy buy a house without selling yours first? With GoService, you can. We have financing options that will make you an attractive buyer. Buy the house you want, then we take complete care of selling your home. Sell then buy, or buy then sell. Either way, GoService can simplify your move. Learn more from your Leading Edge real estate agent today or visit leadingedgeagents.com.
So with that, if anybody has any questions, I can make up some answers and I am super glad to help. Do we have any other questions, Bianca?
Yes, we do. We have a question that says, you think in this market fixes are still necessary? Any stats on it for today's market?
Oh, are they still necessary? So that is, the convenience factor. I will tell you, do we have stats? I will tell you that just the cost of staging alone, the stats are you get back 5 times the cost of staging. You spend $5,000 in staging, that's worth $25,000. But I can tell you anecdotally that no, do you have to do this? No, you're going to sell your house. But the return is astronomical if you paint and clean and it's hip and trendy. For example, we saw recently a house that, that had been on the market that actually didn't sell because they overpriced it, wasn't moving. We came in, I think it was priced at about $729. We came in and did our thing. We painted, cleaned, staged, we moved them out and said, this is what needs to happen. We got over 9 for that house. And I don't think we put them in about $32,000. That, because the premise of this, and I'm so sorry to say it, is that buyers are shallow. They only see what they see. If you look more like Pinterest, if you look like Restoration Hardware, they pay so much more money. They're busy and they don't know how to do it. We know how to make that kitchen look great. We know how to position rooms. Sometimes rooms are awkwardly laid out, but when you have professional staging, you say, oh, here's a nook for a home office, etc. So no, do you have to do it? But you can kind of go the easy way, and sell for less money, or you can be willing to do a little bit more work and you will be greatly rewarded in this market. Bianca, anything else?
We do not. I don't know if we want to give it a few moments, just see if anyone wants to post any comments, but we are all caught up.
Great. And we're right on time. It's just 1 o'clock. I want to thank you all for sharing your lunch hour with us. Next week is don't leave boatloads of cash on the table when you sell. And again, it's not just about staging, etc. We're going to talk about strategies. Why are some sellers leaving tens of thousands or 6 figures on the table and they don't even know it? These sellers might even be happy. We're just watching what's going on behind their back. So tune in next week. Do you know when that seminar is, Bianca? I don't.
Yep, it's going to be Thursday at 12 o'clock instead of 12:30. So it's next Thursday.
Awesome. So next Thursday, 12 o'clock. Hope to see a lot of you back. Thank you for joining us at Leading Edge today.